All right. Welcome to Coffee with Marcus and Mark. Just Mark today, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in the markets and how we are trading them. Today is Wednesday, December 18th, and here's a look at the markets. Can the Dow snap a 9-day losing streak? It's Fed Day. What will next year's projections reveal? NVDA trying to get out of correction territory. Nissan and Honda might become the third largest auto company. And is Powell the worst Fed chair for stocks? Plus, we'll look at a couple of new WTF signals, the win the fear strategy, and see what we did with those today. As you can see, there's a lot to talk about, so let's go ahead and get started. If this is your first time here, my name is Mark Hodge. I'm head coach at Rattle Trading, and let's go ahead and jump to the charts. And here we go. Let me move on over here. Looking at the S&P 500, the S&P 500 rallying ahead of the Fed and this afternoon's statement and press conference. The S&P up 0.3%. The Dow also higher. So is it going to happen today? A 9-day losing streak right now positive, up 0.5%. The Dow on its worst losing streak in 46 years. Pretty crazy to think that the 70s is a half century ago, especially because that's the century I was born in. But hey, that's how life goes, and looks like this is how the Dow goes too. Trying to break this losing streak, and I mean, really, it's all about this sector rotation, right? The good old blue chips are a little slower moving. Many of those companies pay a dividend, and you have tech, that rotation out of blue chips into tech, is we have more of a risk on environment following the election there back in November. But the NVIDIA not able to help the Dow because then NVIDIA became a Dow component last month. And you see that since then, NVIDIA yesterday making lows that we haven't seen for NVIDIA since October 15th. So about 2 months ago, we were at these levels and we quickly snapped back. We'll see if that's the case. We actually went into correction territory, down more than 10%. We could look at this high here, and we see that yesterday we were down 17%. So this week drifting into correction territory. I mean, even if we look at closing prices and we look at the highest close there, we see that yesterday we were down about 14% from closing prices, or 17% plus from those highs that were established back in November. NVIDIA trying to make a comeback, though, up an impressive 4.8% today. And the NASDAQ here, trying to make its way back up to records that we saw on Monday with an update up 0.3%. Now we can look at some of the other markets here. The VIX dropping. So yesterday we saw back-to-back gains in the VIX, the fear index, which looks at S&P 500 options premium. And when options premium is expanding and increasing, it means that investors believe that there is a greater likelihood for price to fluctuate, and it could be to the upside or downside, but it tends to move higher when we have fear in the market, and when investors are fearful that moves lower will persist. Today, though, coming down 4% plus. Crude oil also bouncing back. Yesterday, pretty volatile, finishing lower, over a 1% lower, but getting down to 68.81 before finishing closer to the 70 mark. Right now, we're at 70.55, so a nice little comeback here, up 1.3% right now in crude oil. We could go ahead and take a look at some other markets here. Interest rates flattered down a little bit ahead of the Fed, but Bitcoin pulling back. So yesterday making record highs, getting up to 108,364, right now at 104,280. So down a little bit, down almost 2%. today. A little bit of a pullback there, while equities seem to be doing okay. Now, we can talk a little bit about the Fed, and here let's go over to the calendar and just take a look at what's in store for us today. It's Wednesday, December 18th, and we see here, I can zoom in a little bit, that the red flag reports for today start at 2 p.m. Eastern time. This is when the Fed releases their rate decision. Right now, it's expected that the Fed will cut by 0.25%. They'll also release their FOMC economic projections and statement. Now, the economic projections come quarterly. So the last we heard of what the Fed anticipated for 2025 based on voting members or members of the Fed was that a 1% cut was likely in 2025. Now, that has definitely changed when we look at the Fed funds futures, and we could take a look at that. This is what investors are really focused on for this meeting. So the quarter point is priced into the market. If the Fed chooses not to cut, that would be a surprise for investors. But the real thing that investors want to know about is, what do they believe will take place in 2025? Where will rates be? How far will we drop? Will we drop? And then, of course, 30 minutes after this Fed statement and the release of this information, we have the Fed press conference where Fed Chair Jerome Powell speak. And is he the worst Fed chair for the markets? Well, I saw an interesting tweet. This is a tweet that was sent out by Bespoke Investment Group, and the tweet said that on average, under Powell, the S&P 500 rose just 0.11%. Under Yellen, the S&P averaged a 0.16% rise, so a little bit better for Yellen. And under Greenspan, the Fed or the S&P rose 0.26%. Market performance on Fed days was at its highest under Bernanke's tenure, averaging a 0.5% advance. So that's what the performance has been on Fed days based on the Fed chairs. So Bernanke the best and Powell the worst so far. Now, they also added that the statistic was especially true in the last hour of the trading day, looking at Fed day. So interesting data there for Fed days and the reaction under different Fed chairs. Interesting to see that Bernanke had the biggest increase of 0.5% gain over time under his tenure. Well, let's take a look at Fed funds futures real quick, see where we're at. So 2 hours, 50 minutes, 34 seconds away. And right now, a 98.6 probability that the Fed will cut rates, 1.4% probability that the Fed will keep rates the same. And again, the economic projections here, this is what investors are really interested in, since the cut seems to be a pretty much a done deal. Right now, the Fed funds futures showing that investors are anticipating a quarter or a half point cut in 2025, potentially the first coming in March, and then it's really kind of a toss-up, but the next coming in July, maybe September. And that's what investors will be interested in, to see what the Fed anticipates for 2025 with their economic projections. And again, it was on average, the members projected a full 1 point cut in 2025, and that's almost certainly going to be revised and updated. Well, definitely will be updated, and most likely not in line with the projections that were shared back in September. So we'll have to see. And typically what you'll experience on a Fed day is really three reactions: two coming the day of the statement and the Fed wrapping up their 2-day policy meeting. The first is the reaction at 2 p.m. Eastern. The second is the reaction to the Fed press conference where Jerome Powell is grilled, and that would be going into the close. And then the third reaction coming the day after the dust has settled, to see if there's a follow-up there. So we'll have to see. It'll be an interesting day, that's for sure. Now, let's well, I mentioned this in the bullets that we discussed at the beginning of this market update, and saw this headline. So Nissan Honda merger what it could mean for the auto industry. The two top Japanese car makers are supposedly exploring a huge merger with the two rival companies, and what it could do is make it the third largest auto group by vehicle sales. So this could be interesting, and it sounds like it's not confirmed, but that could be a pretty big move for those two Japanese automakers. We'll see how that impacts U.S. auto sales, and what that could potentially mean with if it comes true, or if there's more news to support this headline and announcement. So let's go ahead and let's talk about some trades. And let me go back to PowerX Optimizer and look at the WTF strategy. So Marcus and I, we are in 9 positions. There was an exit for BMY. Marcus and I did not take BMY, but it actually was a great trade here. This thing rallying after the entry and a nice exit there, getting in at 56.77. Today, the stock opening up around 57.35 for a nice little win. There were 3 new entry signals. We have BAC as a possible candidate. Today, it opened higher and is up if you took this trade. JP Morgan, also a candidate based on the WTF strategy rules. This down a little bit from today's open. And Oracle, also a candidate. Oracle opening just a tiny bit lower, and so if you got into this one, 169.41, looking pretty good. Marcus and I liked Oracle best out of the 3. So Oracle was our pick. However, being in 9 positions, we like to manage 10. And being in 9 positions, we decided that we would hold off on new signals today, especially considering the Fed. And it's kind of a win-win. Of course, we want a positive reaction to the Fed, and hopefully those 9 positions will just take off and move as expected and hoped for, and we'll have some nice exits tomorrow. But and if that were to happen, then adding Oracle today, yeah, we might have missed out on one, right? If there is a little bit of a pullback, though, we get some new signals tomorrow. By keeping that slot open, we'll be able to get into a position based on the post reaction of that Fed statement. We decided that that was a better option for us, and so we held off on any new signals today. Now, I've had a few people ask about wheel trades, and this is something that we discuss every day in our mastermind calls. So the wheel strategy and wheel analyzer, we are running through opportunities every day. And I thought I'd share just a couple of maybes that popped up on my list. Now, I'm hoping to get out of ON. It looks like that's very close to being an exit for me at 90%. And we'll have to see if that fills. I have an order to close at 7 cents. Right now, it looks like the mid might be 9-10 cents on that one. So real close. But there are a few maybes to consider. And UPS here, this is a trade that I'm already in. But I think that we have some nice ranges in UPS, and right now the 123 strike is popping up. So that might be something to consider if you haven't already traded UPS. EOG has some nice ranges, and I'm seeing a 120 strike available for EOG. This one pays a decent dividend, has a lower PE ratio, 5 quarters of positive net profit. And if we look at yearly annual net income, we have 4 out of 5 years positive. So EOG might be something to consider. Qualcomm was on my maybe list. We have the 155 strike available, even though it's up 1.5, 1.6% today. Qualcomm, decent. I preferred ON. I was looking at Qualcomm and ON at the same time. ON for next week, still the 65 available. I think ON has been trading in some really nice ranges, and I've traded it multiple times here. My 64 put expiring on Friday if I don't get out of it with a 90% exit. So a couple of maybes for you if you're trading the wheel strategy, and just thought I'd share those in addition to a quick review of the positions that we are in. And this is where BP opening higher, trading. Looks like we have some support around 29. Nothing for me to do right now. CSIQ pulling back yesterday, but a real nice reversal and some follow through today. So I'll take that. Let's look at Halliburton here. Halliburton pulling back to these levels. Looks like it's finding some support at 27. Coles, a position Marcus is in. I am not. Coming off of these lows around 14. So looks like we're waiting for the Fed now, but positive for the day. So that's always a win. Merck, looks like we're finding some support at 100 here. Another trade Marcus is in. I am not. ON is the trade that I might be able to get out of. Right now I have an exit order to close this one at 7 cents, 90% of the max profit on this one. I got, I think it was a 72-cent credit last week for it. And then there's UPS pulling back a little bit. We talked about this as a maybe for a new opportunity for anybody who hasn't traded it. And those are the open positions right now. So keep an eye on the Fed this afternoon, and Micron reporting after the bell. So a couple of earnings reports this week that are decent. We'll see what Micron decides to share. And that means that it's time for our dad joke of the day. And they're always bad, but that's part of a dad joke, right? I decided we'll go get into the holiday spirit here, and I'm going to have to ask a holiday question for you. What is Santa's favorite type of candy? Jolly Ranchers, of course. One you could share with the family. I know it's bad, but it's also fun. I hope you enjoyed this market update. If you did, please give the video a thumbs up. And if you're new to the channel, please subscribe. And if you know someone who could benefit from these updates and the discussion that we have on open positions that we are in, please share the channel. I'll be back here tomorrow. Until then, happy trading, everybody.